Good evening, ladies and gentlemen. Today is the 21st of October. It's the weekly expiry, and today was probably the most frustrating day I have had because I felt helpless sitting in a position while I'm watching the market move against me, and there is nothing I can do to get out. I'm trading a size of 40,000 shares of Nifty, and I'm sitting there trying to exit my position, not being able to. Just try to put yourself in my shoes and imagine what that feels like. Today, I want to talk about how stupidly unaccountable institutions of our country are. This broker of mine, Zerodha, for the past 4 days has been having this problem, wherein there is some execution problem. There is no intimation whatsoever to clients that we are facing some problems. We have implemented some new system. Because of that, order execution is getting delayed. The API is on top of brokerage, which we're paying for monthly 2,000 rupees. They are having a problem. The terminal itself is having a problem. Whole thing is getting stuck, not working. No communication whatsoever. Clearly, there has been slight issues over the past 3 days, but today it went to a point where it was a complete blunder. The market is moving against me. I'm trying to place an order. No execution. Randomly out of nowhere, 30 seconds later, different orders are executing. Some are executing, some are not executing. Some are stuck in validation pending. It was the most horrific thing that you can go through. Now, the second part is out of my frustration, and this is on me to whatever extent, I should have realized the moment the orders were not getting placed the way I need them to, I should have just cut the entire position, profit, loss, whatever. I should have just cut the entire position. It's not like this was an easy expiry. We opened gap up, got sold into, had a pullback at some 300-point downside from the high of where we opened to the low, 350 points. So we had all kinds of randomness into averaging. As averaging started, we started pulling to 18,200. After that, we went all the way down and another 80 points into averaging, and then up another 100 points. So it's not like it was an easy day to manage. And all said and done, like realistically, even then, given the entire situation, I would have come out with a very good profit, but I couldn't execute my orders. I could not place the orders as and when I wanted to. And as soon as that happened, as soon as I noticed that, I should have just called it a day and said, you know what, screw it, the broker is not working properly. I should have called it. All said and done, it's fine though. It just closed down about 4 points on the sizing. And that's perfectly fine. I really don't get frustrated by making losses. It really doesn't matter to me. It's just that from something that could have been avoided, and the gross disregard that the brokers have to not even come out with what it is that when I've paid this financial year alone to Zerodha, I've paid just in brokerage 5 lakhs. And over my association with them, paid above 25 lakhs to them. And they have the stupidest customer service, right? So it's about time. It's to put the final nail in that coffin. I will look at where I can take my business, and that's about it. I'll ask Ravi to place a timeline here, wherein you can skip forward to just the part where my broker starts breaking down, and just look at what kind of horror it is to sit there. You have a position and you can't get out. You can't get out. You're just stuck. The market moves 100 points against you, 200 points against you. What are you going to do? So I hope you had a better expiry than me. I hope you didn't get screwed over by your broker, and I will catch you later. Take care. Bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 10:20, and I'm going to just quickly go over my position. Currently, I'm short the 18,100 put and the 18,400 call, about 20 points in this. And the idea is there is a lot of weakness in IT and Reliance. There has been quite a bit of weakness from the beginning, and Reliance is almost 30 points away from 2,700. More or less, I'm expecting yesterday's close to act as a support. This quite a large amount to put build up at this 18,200 strike as well. But to keep my distance, I've kept my strike about 100 points away. At the open, I'd actually shorted the 18,200 put option for about 14-15. Backfired very quickly. It exploded all the way till about 40. And that to deal with that, I had initially shorted the 18,450 call option, which is yesterday's high, and from there I rolled it down 50 points lower. So as of now, the position looks more or less like this. And the idea is, at this point, I'm down 1.5 point despite getting burnt by these put options. That's because it was initially scaling up, and during that period itself, this put option burn happened. One more issue I faced is that because of the API's delay, there's some kind of delay in placing an order today. When I'm trying to short the 18100, when I was trying to short the 18100 at about 14-ish, wanted to short it at like about 14 or so, I ended up getting a price of much lower, wherein my average price became 10.78 rather than what I wanted of about 13.5, 14. So that didn't really go too well. But regardless, currently down 2 points. And the idea is that we most likely will close, going by the straddle premium, most likely will close above 18,150 and below 18,350. And this gives me enough spacing, 50-50 points from either of those strikes. And in case I start to have a problem with either, I will be managing it only once they expand to about 15-16, not before that. There's quite a large amount of premium available, considering that we're almost 1 hour into the Thursday and still getting over 100 points for the at the money straddle. Shows that there will be quite a bit of volatility here and there. And yeah, over adjusting it too quickly can be problematic. And the idea will be to take a much slower approach to changing the risk reward of the position. Potentially, this can gain me about 20 points. So about 10 points is something that I should realistically be willing to lose at the very least. And yeah, in case this starts to expand and we start heading lower for the day, then I don't mind sitting on this put option till about 15-16. Beyond that, I will not be holding on to it. Okay, one more preemptive change that I made is I've moved down little less than half of my call options to 18,400, because as of now we are holding at the day's low, which is still above yesterday's low. We haven't tested yesterday's low or broken at this point of time, but there is a potential for these put options to blow up just as we start to test 18,200, even if we do take a bounce from that. And in the meantime, these calls will not have much premium to compensate at all, which is why I have moved down about half the call quantity to 18,350. If we break yesterday's low, I will move down all of the call quantity to 18,350. And yeah, that's more or less the plan. There's considerable writing of the 18,350 call as well, which is now starting to head to the position. I mean, seeing the largest amount of writing in the past few minutes clearly, and has the potential to become the maximum call side open interest. So as of now, yeah, now almost half my calls at 18,350. Okay, so the weakness continues, and basically what I've had to do is move down all my calls to 18,350 and also roll away half of my put position to 18,050. And the idea is, if we continue to breach, if we basically take out another 20 points from here, 18,180, then I'll square off all of these and move them lower to 18,050, because there's a tremendous amount of weakness coming from quite a lot, mainly from IT. So TCS, Infi are getting completely destroyed. Pharma is also getting sold into quite heavily. Auto is down. Reliance is down. Everything is trading at its worst. Reliance has not given that much downside right now, but a lot of it will be problematic. So okay, at this point, when it is at 20, I will be rolling down again. Okay, this is a problem. I've already placed my order. It's taking its own sweet time to execute, which is definitely a problem. Okay, I'm not sure if it's Zerodha's APIs or something from my side, but my order execution is getting quite delayed. Okay, so now on the risk off position, there is once again about 20 points. Currently, I'm down about 6.5 points. And more or less the idea will be, if we now head all the way till 18,100, just as we start breaching about 18,140 on the downside, I'll square this off and roll this to 18,000. And yeah, we'll also start rolling down half my calls to 18,300. Okay, we just keep falling at this point of time. Reliance has halted falling, but TCS and Infi are, the entire IT index is getting completely heavily sold into. So at this point of time, had to roll down my calls to 18,300, and as of now, this has about 27 points in it. I would expect that we actually end up closing above 18,150. So I would be of the opinion that we are quite close to the lows of the day, but I could be wrong, which is why I had to take the extra call side credit. Now, if we continue to head lower, if we break about 18,140 there-ish, I will once again square off half the quantity of these put options, roll them to 18,000, and if we continue to then test 18,100, I will square off all of them and roll them lower. So it's been a steady one-way move, and these put options, which opened at around 10.15, are now trading at 66. So continues to be a lot of weakness. Now the question is, will Bank Nifty also join in? Because Bank Nifty is actually trading in the green despite Nifty being 0.6% down. So if Bank Nifty joins in on the weakness, then that can be quite bad on Nifty itself, and we might see us actually get pulled down all the way till 18,050. So we'll keep you posted. As of now, the time is 11 o'clock and the market has been extremely weak. This is trading for about 27. If it heads to about 30, and I'll have to have 3 points to put on the table in order to hold this position, then I will start my adjustment process. So yeah, very interesting. Consistent sell-off, a huge amount of call writing. The only thing that would be really problematic now, 18,300 call is actually the maximum call side open interest with 80 lakh contracts at that strike. So we'll have to wait and watch how things go from here. As of now, IT tremendous weakness. The time is 11:30. We're just 2 hours into trading, and Nifty has made a 300 point down move from the open, and then from there seen a pullback of about 50 points. IT more or less around this particular level has taken some kind of support and a little bit of a bounce from there. So the main selling which was coming from IT has kind of halted, and apart from that, as far as my position is concerned, my strikes, I had to square off the 1850 put option because at one point this also had gone to about 22, 23 and roll lower to the 18,000 put option, and I'm currently sitting on what is the maximum open interest on both sides. So there is both side max open interest of 18,000, also a psychological level, and call side maximum open interest of 18,300. Now the idea is into the down move. I had also tried to roll down my call option to 18,250 because of how weak the market is looking. The problem is, into the slightest of green candles, they put on a lot of value very quickly. So it is not easy to hold on to such a position. My idea from here is, this is trading at about 18. If it expands to something like 24, I will be cutting the entire position as a whole, unless it happens gradually and I'm able to shift away. Like if these calls start expanding, shift them away to 18,350. Otherwise, I will just be exiting this position and taking an even more risk-off position for the expiry. As of now, I'm down like about 8 points, and this is really not too much that I could have done differently, except for probably keep being a little more aggressive with taking call credit as we kept heading lower and lower. But the problem with that is always that we see dips and we see buying back of those dips, and at that point of time you get burnt because you overly adjusted for one direction's risk, right? So all that being the case, at this point there is as far as today's open interest is concerned, tremendous amount of build up that is taking place at 18,300. This most likely should be the ceiling, and 18,000 on the downside, psychological level, round number, unlikely that it gets taken out very easily. So that's the plan. So we've had a 80 point bounce, and that has completely crashed the put option prices. The 1850 put option is now trading below 10, which had gone all the way up to 25 at one point. And into this down move, what I'll have to be concerned about now is some kind of short covering taking place at 18,300. It's far enough away that I will have some breathing space, just as we start to, if we do take out 18,200 on the upside, which is starting to seem quite likely, then I will be squaring this up and rolling it to 18,350. So we'll wait though. I'm not in a rush because it's happened ample times that on days like this, scan and up move, you very aggressively manage risk once again for the upside, and then there is a continued selling. As of now, the market is weak, so you can't change that. And yeah, most likely we will be expiring above 18,150 and below 18,300. At the same time, I do not want to take additional risk of moving up these put options and once again getting burnt on any kind of a reversal. So for now, we'll not be doing too much. We'll wait and see, and at the appropriate time, we'll try to take risk off on the 18,300 call. Okay, so now after the initial bounce of 80 points, we are seeing a continuation of the sell-off, now coming a lot from Reliance breaking down almost. So Reliance starting to make quite a bit of a down move and is down close to 100 rupees from the day's high. So that is no joke at all. So Reliance making a 100-point move, and what that's doing is that's expanding this put option. I will let it expand till about a maximum of 12 and 13, and at that point I will square it off and roll it lower. The idea is I cannot be affording to take additional risks when I'm already at a 5-point negative, right? It's been a tricky day. We've had wild movements, and generally a day where you have wild movements, it's possible that you continue to have wild movements. So you keep cutting risk according to when things start going wrong. On bad days, like generally, so this principle works out like this, and I've seen this happen too many times, right? So people will get into a trade and they'll start to lose money. So in order to get out of the money situation, they'll take like additional risk. And as you keep taking additional risk, your losses keep mounting, and eventually you get frustrated and you do something stupid. Right now, I'm at a 5-point loss, right? The position I'm sitting on will not only give me back 5 points, it will give me an additional 5 points on top of that. So it is very comfortable for me to just stay as is for now and not do anything, right? Like now again, I roll down my calls, then there's a big up moves. It's just not necessary enough that even into the up move, didn't roll my puts closer, kept my distance on either side, and yeah, so far so good. Now this Reliance move is definitely hurting my position on Reliance. So on a mark-to-market basis, I am actually just down about 20,000 from yesterday. Now, in case we head into the closing like this, in this particular scenario, I will have to take some corrective action against this position, but that call I will take as we are approaching 330. At this point of time, I will not be doing too much. I structured the trade in such a way that as long as we hold above 2600 and below 2800, the mark-to-market changes really won't be very big. The problem will only start after we breach either strike, and as of now, I don't think that should be much of a concern for me. We're still trading 40 points above 2600, so it is not too much of a concern. We'll keep you posted. Bank Nifty freaking hell has been an extremely well behaved thing. I mean, not just today, including yesterday, definitely an inside candle situation of the last 2 hours on whatever was traded. So Bank Nifty showing immense strength, actually, to be honest. And IT also has halted the fall. The continuation only came from Reliance. So more or less not too much to do. Maximum open interest position. Just sit back and let the day play out. And yeah, we'll keep you posted. Time is 12:07. So the time is 12:50. We're a little bit beyond the midway point. And more or less what I had to do is into the down move, I had to roll down my calls, and then into the reversal with the covering on these calls, had to roll up my puts to 1850. Basically from the maximum open interest, I'm 50 points on the inside. This particular position has about 17 points in it. And the idea kind of works like this. As far as overall open interest is concerned, 18,300 and 18,000 most likely to hold. And a lot of straddle positions building up at 18,150, and currently that straddle is worth about 70 points. So even if you consider 100 points on the upside and 100 points on the downside, I more or less cover that range. And in this position, if either of these strikes starts to expand to about 13, 14, then I'll have to get myself out of that position. I ended up rolling down my calls just about when we were testing this low, so I needed more call credit. I did at a pretty bad price, which is why my mark-to-market continues to remain slightly in the negative. So I did it at a price as low as 5.9, so just about here. So about 5.9, 5.91, 5.9. So not a great price, and the slightest of an up move from there has just given 50% more value to the calls. However, because of the kind of call writing that is there, I am not too overly concerned. It is the maximum overall open interest with 75 lakh at 18,200. and I've shorted the 18250. So into a short covering, I should be given more time to react. Actually, if I was trading a smaller size, for a while, this 18100 and 18200 was available for about 40 rupees, and it was a consideration. But on a day where we're seeing such rapid moves, I didn't want to be so close to the money. It will put me in a situation where, in case there's a big move, I'll get quite a lot of slippage trying to exit a large position at once, which is why from here to here, which seems like the most likely expiry range now, 18100 to 18200, and even by straddle pricing, maybe 20 points above, 20 points below, I find that this particular position is quite comfortable. Now, as the day goes on, I will keep reducing the stop loss at which I exit one position and roll it away, but there's still time to go. Time is 12:55, and yeah, as of now, the market has taken a complete beating, but Bank Nifty continues to remain in the green. The time is 1:55. We've got 1 hour 5 minutes to go for averaging. What I had to do is, into the down move, I first very quickly squared off the 1850 puts, moved them to 1800. 1800 started to expand to about 89 squared. That off rolled to 17950. And then I brought in my put side hedge closer to 17900 to basically temporarily completely mitigate any slide that we see till 18,000. When that didn't come, I exited the 17900 put option, moved my hedge back to 17800, and now exactly at a point when the 18,000 and 18,200 was available for about 10 rupees, just slightly under 10 rupees, I moved up my position and increased the sizing also to 40,000. The thing is, I have a lot of my margin stuck in this Reliance position and the rest of the positions. So that's why I have to invariably also keep my scale lower. Now the idea is I have my stop loss orders. Each time I will be exiting 1/4 the position in case there's a big move in either direction. Currently this is trading for 9 points. I'm expecting both of these to go to 0 based on how the OI is looking thus far. And I will at different points be trailing a stop loss. So initially the stop loss would be about 3 to 4 points from here. So currently it's trading at 9. If for whatever reason it ends up going to about 12, 13, I will be squaring off the leg that is bleeding. This is for a panic exit, right? Otherwise I have my orders here to square off about 10,800 quantity at a time of the 18,000 put option and roll to the 17,950, and also same quantity to square off the 18,200 call option and roll to the 18,250. More or less, the day has been okay. It all comes down to the fact that I've been cutting out of positions very quickly. I think the first half I was like, okay, I'm expecting support at 18,200, it can bounce. But after that didn't happen, after that, whichever direction there is risk, I've been very quick at cutting off risk and not taking too much reversal risk also at different points of time. So it's been a very careful approach. And on current sizing, I'm currently up about 2 points and willing to risk probably 3 to 4 points from here to gain potentially 9 minus, so roughly about 7 points more. So it'll be like a 10-point day just under on this sizing, or maybe give up from here 3 to 4 points. Yeah, we'll keep you posted. Reliance is looking like it's going to be closing very close to 2,600, and I will have to do some kind of management for that position. The good thing is the IV continues to remain relatively high, so I should be able to get a decent amount of premium to balance that. So from where I left off on the Reliance position yesterday, it was down about 1 lakh. Now into this move, it's down about 1,40,000, and yeah, we'll see what to do towards the close. We'll keep you posted. The time is almost about 2 o'clock, the last hour, as we head into averaging. Now, unless there is some big kind of a short covering move, this should more or less both end worthless. Anyway, I'll let you know. Okay, the time is just about 2:15, and we have 45 minutes to go for averaging. Into the continued down move down my calls, and at this point, same logic. This is trading for about 11. If it expands to 14, 15, then I have my updated exit orders ready to go, and that more or less will be taken care of. Now the idea is that as far as open interest is concerned, it would make sense for a perfect 18,100 expiry, but 18150 is also very possible. So there is a threat to these calls, and in case there starts to be an up move, we'll have to be quite quick in covering it. So if the threat is coming from the call side, I will square this off as soon as it hits about 8.5, 9. That's when I'll be getting out. As far as the 18100 short straddle is concerned, the straddle has about 50 points in it exactly. So it's pricing in 1850 on the downside and 18150 on the upside. And as of now, my position is not at too much of a threat because we are holding towards the lower side. We're holding almost 30 points below 18100, which means I have a good 75 points from my put side and 75 points from my call side. And that should give me enough reaction time unless there's some kind of explosive move. Heading into averaging into the last 1 hour, it's quite comfortable to have a 150 point position, and that's more or less what's happening there. Continued selling is happening in TCS, and yeah, auto is getting smashed, midcap getting smashed, TCS getting smashed, Infy getting smashed, everything getting smashed. Like Reliance, can you believe it? From 1% up to now, I think like 3% change down. So very, very bad day for the entire market, broader market, as well as the index stocks. My call options are doing great though. Like my call options now giving up money. Obviously, banking hasn't taken a big hit today, so these will continue to keep the premium. They'll lose it all in the next week. ITC working out really well. All the call shots are working really well. It's just this Reliance position is bleeding now because of having all these puts which are in the money, being short in the money. So for now, things are fine. I'll keep you posted. We continue to dip. We are at the day's low, and now we're about to test 18,050. So if this starts to expand temporarily, I will let it. I will let the overall strangle price go to about 14. So if it's 18,000 that's getting tested towards being broken, I will let that 3 points bleed before I switch. In case it's the upside though, I will be much quicker in managing the position. So something to keep note of before knowing when to start covering a position is that if I'm short the 18,000 put, I'm deeply watching the 18,050 price and the 18,100 put price and the 18,100 straddle and 18,050 straddle, because that will give you an understanding of what is the urgency with which people are covering. If the upper strikes are not covering so easily, you don't have to be too concerned. At the lower strike, we are now at the day's low testing 18,050, and that might potentially put these puts at a threat. At about 9.5 is when I'm going to 9.5, 10. That point is when I start to cover this put and roll it lower. If not, I'm going to let it sit as is, and I will definitely not be rolling down my call to 18,100, because going by the OI, there's a good chance that as averaging starts, we make this tremendous up move and pull to 18,100. So very, very realistic that we give an 18,100 closing. So we'll not be in a rush to cover these put options if they expand a little bit. Okay, I have one major issue. I have all of my orders stuck in validation pending. And if these execute, then I'm going to be in a whole world of trouble because they will execute at random prices. What stupidity. Complete stupidity. We'll try to fix this problem. Okay, I'm recording this because I need this for like freaking proof, but basically I have orders stuck and I can't it says order received. I don't know what that means. Now my call options are expanding and I want to exit this call option and nothing. I can't do anything. I'm stuck in my position. Whatever position I have, I'm stuck in it. Oh my god. Okay, just placing the orders to exit this. I am going to be so royally screwed if I'm not able to exit this position. I placed the orders to exit this at market and my orders are stuck. My orders are completely stuck. I can't do anything. I'm literally having to sit in a position that I have no intention to hold. Okay. At random prices, I have been pushed out, or at least I'm out of this, and that's good enough. What the? complete hell is going on. Yeah, Ravi, don't edit any of this out. I need this to be on ready record. Can you believe it? On a sizing of 40,000, I've been trying to exit these call options from the price of 4. Just trying to roll up my put options as well, and wasn't able to. So I have completely random orders executing whenever they feel like at this point of time. So, oh, okay, finally the orders are working. Just FYI, this entire nonsense that has taken place has ended up costing me from a positive mark to market of 1.3 lakhs to negative 76. That makes any sense. Okay, again, try to sell the 18250 call for 3 rupees. Has executed part of my order, and the other half is getting executed whenever the market feels like executing it, apparently. I'm just trying to sell penny options at this point that will not require any adjustment, anything, nothing, so that I can just clear this expiry. And with 15 minutes to go for averaging and my put options being where they are almost 200 points out of the money, I'm selling 125 points out of money call option. Okay, now the order is executed. This is complete bullshit, and I'm gonna clip this and I'm gonna send this to Nitin Kamath and see what he has to say. Freaking complete nonsense. Okay, so genius that I am, and this is what frustration also does to you, is not realizing that the terminal is very much broken and not working as intended. Into averaging, just as averaging started, I was short the 18200 calls and the 18100 put. And because we started making a stiff up move, I moved up my puts to 18150. Now into the reversal, obviously you want to get out of the put options. By the time your order executes, you'll end up paying a ridiculous price, which is exactly what I did, right? Bought it back at 12 rupees, 13 rupees, 12 rupees, 13 rupees, and whatnot. Now, this is where like one, I should have realized the terminal is broken. It's not working. How am I expecting that suddenly it's going to start working as we head into averaging? Idea is majority of the time in averaging, you don't really have to make too much of a, because we were 30 points above this strike. It didn't really expect it would be too much of a problem. Anyway, so that ended up costing me. And then on the reversal, right now we're trading above 18200, but it doesn't matter. The average is about 18178 because this put option is trading for 22 rupees, even though technically it's 15 points out of the money. And there's no way in the last 1 minute the average is going to jump. So all of this is going to end worthless. I have to make potentially an adjustment for Reliance, but I'm reconsidering it. I think I will keep the position as is for a day, mostly because in case it does go further down, I will be able to manage it anyway. It's fine. And meanwhile, on such a bad day, and especially when we're closing with a relatively good amount of short covering, I don't see the reason as to why I should try to aggressively manage the downside. My break even is anyway quite far away. It is still about 60 points, which on Reliance is about a little more than 2%, so 2.5% or so. So that's what is happening. And what a day. Got completely, like, first of all, it was a very difficult trading day. And consistently, whenever it is going to be a difficult trading day, that's exactly when Zerodha breaks down. So that is super convenient. Last minute, Bank Nifty completely rocketed out of control to make a new all-time high. So I don't know what happened to people on that front, but yeah, the market is closed, and this put option, let's just go over. This put option has 21 points, so the settlement price will actually be 42 points below what the spot would indicate, and I will be booking a 1.4 lakh loss instead of probably what would have been easily 4 to 5 lakh profit. So that's kind of what is the most annoying part. So anyway, this happens, can't do too much about it. Thank you so much for watching. I'm certainly going to be doing something about my broker before I start trading large quantities again. So we'll let you know. Thank you so much for watching.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.